So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips rocking and rolling here, 12th of June, 2020. No trade calls or recommendations. We're responsible for their own stuff because we're here for educational purpose only. So, what's going on? What is going on? So, hope everybody's having a great week. A short update. We'll discuss a lot of things that are going out in the weekly outlook, as nothing much has changed to what we discussed. Right? We had we started with a video, the tactical update, I believe on Tuesday, saying that there were a lot of things going from, put call ratio to the way the Robinhood people were trading to just all those indicators, the way FX was leading, et cetera, that pointed to the fact that we were very close to some kind of a blow off top and a 5 to 10% correction. And, we got a nice move, and yesterday was very, very aggressive. It accelerated. And so that's in play. We'll discuss that. I'm going to do a blog post in a bit with a lot of the interesting weekly charts to keep an eye out for, to give you an idea of some of the sectors. And then on Twitter, I will post some of the FX ones, but we'll review most of it on Sunday. Here, what I wanted to discuss as basically equities, we've had that correction. ES is stuck back at the bounced at the 3,000 mark. YM bounced at the 25,000, fairly interesting levels. I wanted to discuss a little bit more of a technical thing in nature, which I think may be interesting for some of you. So the question is, what to expect when you come in on a day like today. And I know a lot of you guys like to also fade some flows. So I just want to make sure you understand what the best way of doing that, what the highest odd way of doing that is, right? So when you get a big sell-off, like on a day like yesterday, so when we see ES down, YM down, NASDAQ down, everything grinding lower, you see the commodity currencies completely in sync. We're discussing that basically yen, Swissy, Oz, everything was pointing to this roll. When is it time to fade, right? As we said yesterday in the weekly webinar, in the daily webinar, even when equities were down like 3 to 4% into the cash open, that's not the kind of day where you go into the office thinking, oh, I'm going to go with the flow, right? Because if the average move on the ES or on the NASDAQ or on the YM is, let's say 30, 80, whatever, right? You don't come into the day when the market has already kind of moved double the average daily move only in one direction, wanting to go with the flow, right? You understand you could have that down 6 to 7% day, but if you're a betting man, if you're looking at the odds, if you're looking at the probabilities, playing on continuation on an indice where is already down 4%, and you're looking for another 3% down on that day, is you're betting against the gods, right? So it doesn't mean it can't happen. But there's also equally a time to understand that you don't want to necessarily bet against the odds, but that doesn't mean you blindly want to fade. You have to pick your level. So when is the ideal level? Well, the ideal level is once we're finished with the move down. And how do you know when you're finished with the move down? So the thing you do if you're trying to fade is basically you'd still be trading from yesterday, right? So what you have to do is you have to wait for that overnight session to start. You have to wait for basically, New Zealand, Australia, China, Japan to come on deck. And what you focus on is you wait for the previous day range to bounce. What does that mean, right? So the moment you come into the overnight session and all the Asian countries come on deck and you see that the lows on the ES are not getting taken out, you see that the lows on a YM are not getting taken out, you see that the lows on the NASDAQ are getting bought, that's when you get back long. And what you look for is you're looking for a bounce. It doesn't mean it's enormous strength, but you're looking for these at least to come back, ideally all the way back into previous day mid. It doesn't mean they have to like skyrocket. They could, but you're just looking for a little bit of a healthy retracement, even if things are going to stay on trend, because you can't bet that markets only move in one direction for a sustained period of time. And that's equally the same discussion whether you're looking at Forex, right? You can't expect basically this kind of move, Aussie, Kiwi, CAD to continue indefinitely. But as you're going into the cash open, are you going to try and get long as it's trading below previous day lows? No, because you could get a lot of liquidation. It's thin liquidity. You can really get run over. Kiwi, are you going to get long and it's below previous day low? Absolutely not. Are you going to get short when it's... No, but the moment we pick up and we come back inside, that's where you get long. We come back inside, that's where you get long. We come back inside, that's where you get short, and your stop is above the extreme that we've put in the overnight session, and that's where you're looking for them to come back up, ideally into previous day mid, ideally into previous day mid, ideally into previous day mid. It doesn't mean that they have to, and it doesn't mean that they can't go even more. But the point of the video is just to tell you, wait for, you don't try and catch a falling knife or just short something that's going parabolic. You have to wait for the Momo to stall. You have to wait to some of that profit taking to come in. And all things being equal, the last time you can try and fade and be a little bit stubborn sometimes during the RTH session if you've got a nice level and you want to take a shot, but especially in the overnight session you can really get run over also because of the slippage and the really thin liquidity. So you wait ideally for those overnight sessions, but then you wait for the market to stall and reverse, and then you never fade strength, right? It's really a recipe to get in trouble. So again, we'll review all these things. There are a lot of things shaping up today. Watch a lot of the weekly closes. We'll go through all those things, but I think, also on that, on the trades we've been looking at, everything's been playing out quite nicely. But again, we'll do a better review in the Sunday Open, but in the Sunday video. But I really wanted to use this opportunity to highlight this action again around something as simple as the previous day range, but now that we're doing it live, it makes a little bit more sense. Again, all these trades are very tactical. You could already be flat because you're just looking for a one-to-one trade to take off the same size of the stop, because these trades are very, very high odds. So if you look at this kind of action over time, you're bound to get a better than a 50% win rate on these trades, even if you're trading one-to-one. So they make sense, but you don't chase, right? You have to wait for the location. You have to have the, you can't come in and get long here. You can, but the stop placement is a lot more difficult and you have less edge. It doesn't mean it can't work. But again, hope this was useful, guys. Have an awesome one. Talk to you guys soon. Take care. Bye-bye.